Good morning, everybody. Hey, welcome to Monday. It is June 6th. Hope you guys had a great weekend as we prepare for the wind down of the second quarter. This month, there's not a lot of earnings coming out. There's not much in the way of economic news. I mean, we got a little bit here and there, but not near what we've seen the last 2 months. So this is the wind down month. There'll be a little bit of news here and there. So the companies are going to be traded basically on news. And we'll talk about that and then some of the news that's coming out on some of these different companies when Dave joins us here in just a few moments. Before we do that, though, let's just remember that there's a lot of stuff out there that you and I cannot control. But as you get closer and closer to retirement, it is important that you control the amount of risk you have in your current portfolio. That's why we developed the Core Retirement Design. Give us a call at 863-382-0037 to schedule your Core Retirement Design phone consultation. We'll spend 30 minutes with you, walking you through the process, making sure that you're on track for the retirement you always dreamed of. Hey, with that, we got Dave coming up next.
105.7 Light FM, my schoolboy crush continues. Faith Hill there. It's 8:41, 19 before 9. Let's check in on your money and see what Wall Street's doing to your 401k and IRA today. As usual, it's Monday. Not a lot of news per se out there, but Phillip, Statler, and I generally find something to give you some guidance on. Let's check in with Phillip. He's on the phone from Statler Financial Services. Good morning, sir. I hope you had a good weekend.
Good morning, Dave. Doing well today. It is, the first real Monday of June. And, this is the third month of the quarter, which, you mentioned earlier, there's just not a lot that happens during this month. Earnings are pretty much gone. There'll be a little tidbit here, a little tidbit there, but for the most part, it's done. And the economic news, there'll be a little bit here and there, but the big rush of stuff is over. So now it's just whatever news is coming out about the different companies that'll be driving the markets.
And it tends to mean that what would normally be a gloss over small tidbit of news can end up moving the market an awful lot more as well in doldrum times like this. Friday was a down day on Wall Street, and you and I were kind of noodling it through. Dow was down 349 points. The S&P was down by 68, and NASDAQ took another fist to the jaw. It was down 2.5%, down 304 points on Friday. And both of us looked at the charts and said, well, it was pretty much just down and stayed down all darn day. There really wasn't any one thing that moved it, except we were following up a decent day the day before.
Yeah, that seems to be the case, Dave. They just did not want to get out of the week in a positive note, I guess, because it was a rough day and it finished up a negative week. And then we got today, which right now, as we speak, it looks pretty good, right? So the question is, can we follow through and make it a green day all the way through, or are we going to have this yo-yo effect every week?
My feeling is I think the yo-yo is back. We seem to be entering that pattern of a down day is followed by an up day, and then the big money guys take a little profit off of their shifts, and that brings it down again for the next day. And I'm not sure if I was trying to day trade my way through life that I'd enjoy this one tiny little bit, but the big money guys are doing okay off of it. Tidbits we've got out today, among other things, we've got some revisions in the Standard & Poor's 500 coming up over the next few weeks, don't we?
We do. It takes effect on the 21st of June. And so here's what we've got. We've got Keurig Dr. Pepper is becoming part of the S&P 500, as well as a company called On Semiconductor and a real estate investment trust called VICI Properties are all going to join the S&P 500 on June 21st. So that's coming up. And of course, when you get to join the S&P 500, that's helping their stock significantly as we start the day today. I mean, you've got Keurig up 6 3/4, On Semiconductor up 6.6, and the VCI Property up 6 3/4. So that seems to be the theme for getting added to the S&P 500.
Well, it does make some sense. I mean, a lot of the index funds now all of a sudden feel an obligation where they have to add that stock, so there's automatically a buy signal. I'm betting the ones that are getting dropped are also losing some ground today.
They are. So who's getting dropped out of the S&P 500 is Under Armour, they're getting bumped down, not totally out though. That they've lost some market cap, so they're going to be a mid cap company. So they're going to get moved to the S&P Mid Cap 400. Another company called IPG Photonics is also getting moved to that category. So Under Armour is still up about 1/3%. Phototronics is unchanged right now.
Okay. As things go on, well, they don't want to sell them until they're off of the S&P quite yet, too.
That's true.
Yes, other things going on in the process. You mentioned something that really surprised the crud out of me, because one of the things that I noticed as we came out of the pandemic last year, all the cosmetics and makeup and hair care and personal care lines all went crazy. So I kind of took all the bad news from many of those companies off my radar screen, but holy crud. Revlon is contemplating Chapter 11. That's kind of earth-moving, because they're kind of one of the household names in personal care.
Well, I'm making the assumption based on the report I read that they've got a big debt payment must be coming up, and they must be short of cash and don't have it to pay. So they've been in talks with the lenders to push back that debt payment a little bit, because basically they need to do that in order to avoid having to file for bankruptcy. So they, they were trying to push that, extend that maturity date. It's about $1.7 billion of debt that comes due in 2024. I guess they have a payment on it now, and that's
not exactly your day-to-day car payment.
No, it's definitely not. But so far, I mean, there must be some indication that they're going to be able to work everything out, because they're actually trading up today, 1.5%.
Okay, well, that's good news. That's just one of those household names. I mean, that's when I refer to Microsoft as one of the dinosaurs in the high tech industry, Revlon is one of the old heritage names of the personal care industry. Seeing them even having the remote potential of going away would kind of be a tragedy.
Yeah.
Other stuff, we got some merger acquisition stuff in the airline industry going on, huh?
We do. So, we've talked about this a couple of times now. When Spirit Airlines, we had JetBlue come in and make a bid for Spirit Airlines. And then you had the other airline, Frontier, come in and try to buy them out. So we've got this give and take for Spirit Airlines. And so JetBlue actually came in and sweetened its bid and said that they're going to put a $350 million breakup fee in there. So if for some reason JetBlue backs out, Spirit would get $350 million. So I don't know. That's so we continue to watch that. There's still not an agreement yet as to whether that will happen. We continue to watch that. The other one that I would talk about, and this is not, we're not talking about any acquisition or mergers, but I think you kind of mentioned it earlier, and that's Amazon. Amazon,
big
right?
Stock split, yeah, big stock split, yeah.
They said that the headline was it'll be the first time in 20 years or something like that that the stocks traded in the 3-digit range instead of the 4-digit range. So I think I saw that when they get ready, they actually do the split, which I think comes out this morning, if I'm not mistaken, that it'll open somewhere in the $120 to $130 range.
That may get them in. Is there an index indicator on that somewhere? Do they have to get down into a per share price in order to remain on one of the indexes? Because I know the overpriced stocks sometimes aren't popular on the index funds either.
Not that I'm aware of.
Okay.
But I just saw a little article that said they're going to have to when they get done, this 20-for-1 stock split is going to get them down to about somewhere between 125, probably, and 130.
A 20-for-1 stock split. You're still over $100 a share. When I used to work for a publicly traded company, our CEO we did stock splits when our price got up there, because he just felt that a $20 a share stock price was a more comfortable number for his employees on our ESOP. So every time we get up to 40, we'd split the stock back down to 20. So there's a lot of variables that go into a decision for a stock split.
There definitely are. And I think that, one, making it more affordable for people to be able to buy the stock is definitely one of them.
Absolutely. Other tidbits that have come up this morning. There was an interview done with Intel's chief executive officer, and he said that he didn't expect our chip shortage problem to end until well into 2024, which is certainly not good news for anybody. And an analyst was saying, we keep looking at the consumer spending numbers, and they keep going up, even with inflation as it is, and reasons why people would go back. And that one, at the very least, interview, I think it was Chase Manhattan, somebody up there was saying that, well, consumers realize that when the prices go up, they never go back down again. They just stay stable where they're at when inflation gets tamed. So if you need that new pair of Levi's, you better buy it now because it's going to get more expensive and the price isn't going to go down. That might explain some of the, increases in consumer spending that you and I really haven't been able to explain during, quote, tough economic times.
Well, that's true. You don't see prices drop once they get to a certain level. And that would be, it'd be nice to see that though. And maybe this one will be different, but I doubt it.
Never is, except for gas and food tends to fluctuate, which is why they take it out for the core inflation numbers that we look at. But everything else, once it ratchets up, pretty much stays there, doesn't it?
Yep, it does. It definitely does.
Pretty much. Resetting the table for the morning, a down day on Wall Street on Friday. And if we get into that upsy-downsy rhythm again, I'm just betting a little green ink this morning, 45 minutes early. What are we looking at, Phillip?
We got some nice green ink this morning, Dave. We got the Dow up almost 0.9%. The S&P is actually over 1. It's actually almost 1.15 right now. So it's getting a good move. The NASDAQ 100 up almost 1.6% this morning. The Russell 2000 is actually up a little over 1%. So things are looking really bright to start this week out, this first full week of June. On the other side of the coin, we got silver making a huge move today, up 2.8% to $22.52 an ounce, and gold up about 1/3%, $1,856 an ounce. Crude oil is heading down just a tinge, but it's more than what it was on Friday, Dave. I think $118.70 a barrel.
And somebody was saying on the Talking Head shows this morning that there was a possibility we were going to be seeing $5 a gallon gas, maybe even by the end of this week.
Don't say that, Dave.
I'm trying not to, but they say cussing on the radio is bad. News is news, such as it is. Overseas markets, everybody was up. The Asian Rim had some big moves, including like a 2.7% increase in Hong Kong overnight. Europe is kind of following suit on us. Most of their indexes up by better than 1% halfway through their day as well. We're looking at retirement and looking at trying to figure out what my retirement is going to be like. That takes a pair of eyes to find me some stability. How do I find that with you, Phillip?
And then give us a call at 863-382-0037. That's exactly why we developed the core retirement design. So give us a call. Let's walk through that process. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning about the same time. Phillip, thank you so much. I'll see you then, all right?
All right, man. Have a great day.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. Again, I hope you had a great weekend. I look forward to you joining me again tomorrow, same time, same place. Hey, until then, take care. Bye now.